Today is Friday, February 15th. You're looking at a 4-tick range bar chart in a forward emini S&P 500 futures contract. Today we're going to do something a little bit differently. I want to incorporate some data from Billy Duryea. He's over at the IOAMT, and Billy's doing the market structure analysis for our new website, followthebots.com. I've put up 3 market markers here on price. The top range here, this fuchsia box with the red border, was Billy's market structure that was published on Thursday night, last night, that gave a range, upper resistance range between 1520 and 1522. The bottom, Billy published support at 1510 to 1508, and then also had a minor support area at 1515. And what I want to do is just incorporate how to use Billy's market structure and Sceeto's data to really tune that. So Billy's going to put out a market structure the night before your trading day. So you'll have your known support and resistance zones. And what we do is during the day we update that information and we look how the bots are trading and how order flow is trading in and around those zones. So let me just walk you through some of the thinking, some of the analysis. Here's middle of the night, 3, 4, 5, 6 o'clock in the morning, and the market moves up. We see some selling by the bots around 8 o'clock, but we're not here up at our zone yet. This upward move, we're expecting the price to move somewhere to 1520 to 1522. The first time price marches up into this area, we don't see any selling. We do see a little buying, and we're not sure whether this is exhaustion or new fuel to move the market up. Also, if we zoom in on this area, moving up into the high in the pre-market, we do see a higher high in MACD. So we think that price is going to at least tap this area up here again, or possibly go through, make a higher high in price, because higher highs in MACD with a higher high in price infers the price is going to go on. So when we see these bots, we don't think that this is exhaustion, but it's going to give another tap up. It turns, it does move it up. So if you're selling the 1520s, you want to be very cognizant that you haven't really seen any selling yet. The market does tick up to 1521.75, pretty much the upper end of this resistance zone, and right here at the high we see orders replenished, buy programs waning, and then we see a lower high put in at 1521.5, where the high frequency trading sell surges come in, and then the selling. And this is what we really want to see. We want to see the market structure and the bots align. Now, once this is put in, what we really want to see, if you've been following the videos, is a lower low in MACD. That's going to give us an inference that not only has the market turned because we see the bots trading the turn, but we see the overall flow. And then sure enough, from here to here at 1020, we've got a MACD of somewhere in the -10 range. And then by here at 1030, about 10 minutes later, we do see a significantly lower low, around -27 in MACD. And that's what a market turn should look like. It should have all of these components, right? Market's going to move up to known resistance. We've got a rotation in box structure, the white being tipping points, and the red that occurs after the white would be new fuel, and then we've got increasing flow to the downside. We know that from the market structure that Billy published on Thursday night, we're looking for resistance right in the 1515 area, minor support. And the market does march down here to one tick off of that 15.25. The bounce is good. One thing I want to note is that the inference when you're coming down here, will this minor support at 15.15, will this be the low, or are we going to breach it? And this is again where lower lows in MACD come in, because we see, let me put the marker up. All right, we see these lower lows in MACD. So as MACD comes down here, we think that we're going to at least retouch this low. 15.25 or breach through it. Sure enough, the market does move up. Market moves down, slices right through that number. We've got a tick ratio here, and our next target is going to be the 1510, 1508 area that we know from our market structure. We've got a lower low in MACD here, and we think we're going to see continued selling. And sure enough, the market does move down. Here I've zoomed into the low coming down to that 1511.5 area, and what you see here in MACD is exactly what you want to see. You see a lower low in price, but you see a divergence, a higher low in MACD. Also at your low bar, here we have bullish MACD, and that's exactly what you want to see at the end of a move. As we start to get closer to the zone, 1511.5, around 6 ticks above the top of the support zone, we do see proprietary tick ratio. We see nice buying in MACD, and SPW, which is sell programs waning. So this is going to give us an inference that we may not get all the way down to the target because the buying is coming in. We no longer see any selling from the bots, and we see buying come up. So this I would call your right shoulder. I know if you follow my trading, I'm always looking for a right shoulder to get in. I'm not going to buy the low. I'm going to wait for the right shoulder. Boom, boom, boom. And by here it's 1517. That's 320. We know historically if the market is trending into the close around 330, then generally from 330 to 350 you're going to see the trend continue as long as you see flow buying. And we see flow buying here in the green, and sure enough the market moves up.
Sceeto's advanced algorithmic order flow data is now available within TradeStation, NinjaTrader, Multicharts, and SierraChart. For more information, please visit www.sceeto.com. This is Cuerva from Sceeto. Happy trading!